Good morning, everybody. Pretty quiet out of the holiday. All right. So where are things here? Pretty much unchanged. And you got to wonder whether things are just going to stay that way all day since the market's open half a day. Typically things go up, but they've gone up and up near this prior high here. So I titled the intro today, had a bear sandwich. And you're saying, well, what is that? Well, last week on the weekly chart, we had a red bar. And depending on what you look at, it was, this was a smaller range bar, but some of them are larger range bars. So we call bear sandwich, where you have these range expansion bars with the bearish bar in the middle. Dan coined this about 20 years ago. We typically talk about 180 reversals and 123s. This doesn't happen as often as they do. But when it does happen, of course, it's bullish and it suggests higher prices. The S&Ps do have room to the next level. I don't think they're going to get there, well, this week, but let's see what happens after the 4th. Normally after a wider range bar, you get a bit of a consolidation. We'll see how that plays out. It is up at resistance here on the hourly chart. And it may be a quiet session. So let's go to the futures as we normally do. And one of the things I wanted to point out was that we talk about is a range expansion bar. A range expansion bar, and this is only a couple of days up, but we talk about igniting range expansion bars, wide range bars, and ending ones. Now, this is more like a stall one since it's at the prior high, but you can see, the wide range bar in the futures because it's 24 hours, whereas if we look at spiders, you see a large unfilled gap. And you want to view that as a wide range bar for two reasons. Well, first of all, there's an unfilled gap there, right? Sometimes gaps get filled. This one shouldn't get filled in the short term. Since it's moved up and the trend is up, so on and so forth. So with the wide range bar moving up like that, we look at, okay, the momentum is going to stall. Well, this is kind of the same thing, because it's a big gap and now it's got to consolidate a little bit here. And eventually it should go up because this has got room to go higher. Now, as we look at other sectors, you'll see that they're underperforming and they don't have room yet. Help me. Yes. So let's look at those. Well, let's go to SPX, which I think it's not within my comfort level. Things could just stay like this and not go anywhere. But it's just too close. It could easily break the low of the day. It's unchanged here. And to get to 44.70, the market's half a day. It's a personal choice, but it's just unbelievably close to be considering, doing these credit spreads. I mean, there were times where, prices were here and we could be doing credit spreads down here. We call them no-brainers. They're just so far away, and we've got lines of defense, unfilled gaps, pivots, congestion areas, and this is not within my risk tolerance level. So if you like it, Jake, you do these more aggressively, I think, but those are the levels where there's premium right now to do those. Now, what's underperforming, we saw last week. You say, how is that underperforming? Well, when I compare this to the S&Ps are up at the prior high, and this didn't gap as much. It didn't go as far. It's up at this prior pivot high, so you can see why it's stalled. But you can see the same red bar in between there. I think we're going to go through a little period of consolidation, but typically the end of the month, the beginning of a month, around a holiday, the markets tend to be bullish. So I wouldn't expect anything to fall apart here in the short term. I don't know how much they're going to move, ahead of the holiday, which is today, but after the holiday, the end of the week, I think we'll see. Let me go back to those futures for a moment on the S&Ps. And it's more of an example that I wanted to show of what we call a bear sandwich. Now, and the essence of it is, here's this bearish bar. It's moved up a bunch. And actually, it came out of a consolidation. So it's the start of a move. And it tries to go down and it flips right back up again. And it's a display of how strong the demand is. And so while it might consolidate a bit, our expectation is that it can go higher unless it breaks below this low. And in the weekend video, I can't have time to do it now, but there are so many monthly bars or charts that are bottoming out with range expansion bullish bars on the monthly time frame. So the expectation now is that this very narrow breadth market, what's been driving it? Apple, Microsoft, Google, Meta, all of those stocks, and most things were doing nothing. So now we see that these beaten down stocks that have been doing nothing starting to broaden out and start to move up. So there's going to be many more opportunities than there have been, in the first half of this year. But those stocks and indices that did well are probably going to start to lag. So we'll see how the second half plays out. I think historically it's not going to be as positive as the first. Well, it depends on where you look, of course, because if you look at the Qs and they're up 30%, you would think, well, they're not going to go up another 30%. That's unlikely. But when we look at the Russell 2000, the more speculative small caps that have been doing nothing, well, and you can see this bullish reversal here. And there's plenty of other things, whether it's the Russell 2000, whether it's retailing, whether it's healthcare. There's so many different sectors, which I'll just let me show here. Let's go to the monthly. You see monthly charts, industrials, wide range bar, and where tech, it's moved up a whole bunch in their prior high. Historically, they're not going to move as far. So, and here's Europe doing nothing for quite a while. France and United Kingdom and Germany actually making lower highs. So maybe some of the money that's been going over here is going to come back. But look at consumer discretionary monthly chart. Now, these are closing bars. And why I'm mentioning this monthly charts, because these are closed. We know they're not going to change from what they are. Materials reversing back up again, and so on, as you see, green monthly bars. But the big ones, the wider ones, clearly are more bullish, where, well, you look at others, Japan's had a good year, but probably not going to go as far. Consumer staples, not doing much of anything, healthcare. But so there's times to look at different time frames and get a perspective from a longer term point of view. And the weekly charts, there were some good ones. Materials, I think, is going to be a big performer, make new highs eventually, and chemical stocks and a few others that we spoke about in the newsletter. And so that expansion in breadth is going to happen, and going to look for those winners this year and thinking that they're going to continue to outperform, which kind of seems like common sense, but markets rarely are about common sense. They more of the common sense can lead you in the wrong direction. So as these other sectors begin to outperform and those underperform, I think that's where the money's going to be made this year. Okay. So the other futures really aren't doing anything. Narrow range bars. The Qs, Russell, we looked at, narrow range bar. Interest rates aren't moving very much here, as you can see. The 13-week just flat. It's holiday. I was surprised to see the 5-year beginning to move up, but that's coming in a little bit. It's in a trading range. The transports were the big winner. Right? That really was, the amazing move to catch up. It started here and just continued bullish consolidation, but this is now up against this prior resistance area. Maybe it gets a little bit more to go to get to 16,000. But so the upside in what has been moving is going to be more limited in the short term. We'll see how much it corrects. And those that are just starting to move up, any kind of correction that comes, which could be in the middle of the month, we'll see how they hold up. And in the following weeks, this is what we'll be looking at, those stocks and ETFs that have underperformed, that are starting to catch up here, to look for points to get on board them and take advantage of this theme that breadth broadening out into the second part of the year, taking advantage of those. So could look at everything else here, but nothing really is moving very much. Bitcoin, oil, there was some news that now Russia is going to hold back production, and the Saudis have already done that, but it hasn't had much of an effect. It's been in a trading range now for quite a while, so that isn't doing anything. And gold downtrend, looking for this to flip lower, but if we see this 13-week inch up a little bit more, and so far the consensus is the Fed's going to raise another quarter of a point. Last I looked was like 86-87% probability of that. But I think the markets are getting used to it, and that's been the message of why it's going up. And the assumption is that they're closer to, not doing much more after maybe that quarter. We'll see if they do another one after that. But what they're doing better show some effect in their numbers, or the markets are going to probably get jittery again. So, all yours, Dan.
Good morning. Yeah, I would type that in the commentary. I'm shocked at how resilient the markets are here with everything going on in the world. All right, we have a huge watch list. So there's a lot of bullish things out there. I always say, just because we don't trade the actual broader markets or sectors, we are always find beautiful setups. So I have a couple of alarms going off on new trade ideas. All of our, well, not many alarms. So let's just jump right to my big interest list here, unless you have anything you want to look at. AJX, I just saw gapping up as Greg was talking. Nothing there. Yeah, it's an example of trading a beaten down stock. FAT, look how this actually broke out daily, weekly, bottoming pattern monthly. So that easily has room to $20 or low 20s. I'm gonna put that on my watch list here on a pullback. Monster is buying that Bang competitor drink. No pattern though, although it's what we call a bull rectangle on the weekly. So you know what, I'm just going to set an alarm here at 57.90. I've set a ton of alarms over the weekend on things of interest, because this could be possibly getting in on the turn on support. So that could be a home run entry right there over Friday's high. This thing broke out daily, weekly, monthly. More of a V bottom instead of a bottoming pattern. Trade's kind of sloppy, but it's worth watching. Disney had their new Indiana Jones movie come out. So what do? Look at the stock. And I have an alarm at Friday's high. This would be a beautiful put spread candidate because of this pattern, retesting it for the third time. Plus, Thursday had a bearish gap, took out the prior low, range expansion close. That is a beautiful put spread candidate. But I looked, and with the low VIX, even the 88s, which are a tad tight, there's no juice there. AZN, I'm gapping down here. All right, so I have this in this middle chart, AZN, as an excessive gap candidate. Let's just see what happens. I mean, ideally it would have been 64, 65 to get that rubber band even stretched a little bit more. Tesla gapping up 5.5%. I mean, I'm no fundamentalist, but I'm shocked that it's gapping up this much. I mean, yeah, you know, the news is they had positive deliveries, but they only exceeded their deliveries estimates by like 5%. Okay, that's good. But now you're increasing the total equity of the company over 5.5% after a run like this. 30-minute low. Well, it's actually gapping. Yeah, it's gapping right to this prior high. 30-minute low is actually a call spread idea. I wish today was or Friday, because then it would be a 0 DTE day, and I would be all over that 30-minute low. I'll just have to see how it sets up, but I'm not sure I want to play with this fire for till the end of the week. Some of these other ones, wow, some of these have had a monster run. They also reported their deliveries. Neil, nothing to do here, and that's the problem. There's so many things extended that have multiple day runs, but they have bullish weekly and monthly charts, and so we just have to be patient looking for the pullback, because the weekly here you got a bear sandwich, but you got nowhere to put your stop. There's no continuation pattern, nothing. So what do you want to do? And that's why I actually gave a number of naked put trades in the ETF letter this weekend. Like, here's one example. You know, hack. I think I said let's short, I forget, the $49 or $50 puts, because then, I said I want price improvement. So I want them to come in a little bit. Here's another example. But this one's actually a continuation pattern, Lester. But I said, let's sell the 180, whatever it was. You got to go look. 185 puts on that. RMTI, I was watching on Friday for an entry. I want to sell the $5 puts on this. I see it gapping up, and I want a price improvement. So that looks like that's not going to get filled. Greg, so you're taking care of the access problem. XPEV, wow, that one actually did. I mean, it's easier said than done. I mean, would I have bought on this green bar here? I don't know. It came down hard, but I probably would have sold the puts. It's another bear sandwich breakout. This one looks nice as a long-term bottom, and this has room to $20. The problem is it's already up 35% last week, but that looks great on a pullback. Hubs breakout. I'm going to give the 500 or 490 put spread I just posted, 490, 470. You could, yeah, I almost did the 500s. The only reason I went up $10 more is just because it'll be lower delta is all, but that's a personal choice. DT, bull flag on the weekly, breakout monthly. And see, that's when there's no entry yet, but it's a big old rectangle. Here's my flagpole. Here's my rectangle. So that's on the watch list. NOW, same. It's a big rectangle. So it's a bear sandwich weekly and a breakout monthly. So I have a monster watch list. Marvel, Greg says same but different. Little, sloppy bull flag weekly. This will be a red bar ignored. So I got my alarm wherever, 60, I think, breakout monthly. This is a short watch. Sam I am mentioned it. So this is a failed buy setup with relative weakness, with a void. Bloomin', not technically a 1, 2, 3 because it exceeded it, but I have an alarm at 24.25. BTR's a 1, 2, 3. I got an alarm at 47.60. Charlie Foxtrot could be a bull sandwich. I got an alarm at whatever. I've already set all these alarms. GBA would be a red bar ignored breakout, bullish weekly. I got an alarm 40.30, I think. SPG, there's Barron's had a big article about these REITs bottoming. They gave like 8 or 9 or 10 to watch. This was one of them. So yeah, I'm going to be watching that sector too. EQIX, bear sandwich on the weekly, breakout monthly, but I'm up 5 bars of resistance. So this was such a recurring theme when scanning this weekend. It's like I got bullish, bigger time frames, but there's no entry on the daily. EQR, number REIT, same. AVB, REIT. I'm just waiting for my pitch. UGI, a short watch. It's just relative weakness in a downtrend. This is a big upside shakeout, breakout failure in a downtrend. C could be a short watch. A number of these banks said they're increasing dividends, but I got an alarm down here somewhere, 4605. Rock, positive mention Barron's. Surprised I don't see any pre-market activity. It's up a lot though. Look at the angle of the 20 to the 50. That's telling you, and they were flat here, right? So if I were to take these candlesticks off, this is telling me that it was a rip-roaring breakout and it's extended. It's exactly what those moving averages tell me. IR was a breakout, all time frames. Marvel, I just had an alarm go off. All right, see, so I had an alarm, yeah, right here at 60.50. So if somebody wants to watch that for us. HIG, breakout, it's what concerns me. It's 1, 2, 3. Okay, so it's had multiple attempts to break out and got smacked right back down. Now, granted, Friday was a closing breakout. I think I have an alarm at 72.30. BXP, another REIT. This one I did put in the letter because it's tighter continuation pattern, to the igniting breakout with a void. So that one I like as a new trade. AMAT's a 1, 2, 3 watch. Wow, actually getting down here. What are semis? Semis are actually up. All right, so that one's relative weakness. Hack we looked at, iBuy. Same in the sense of bear sandwich weekly, up multiple days at resistance, bottoming pattern on the monthly. So, you know, if this thing gets going, I see 70 in the cards for this. You know, all I'm doing is just eyeballing, you know, some type of retracement is all. But I like that on a pullback. Pave, man, oh man, oh man. I wish we got in right here at this 1, 2, 3. Look at that beauty. Closing breakout, 1, 2, 3. Bullish weekly. Buy setup on the monthly. That was the entry. Now look at the 20, 50, 200. It's short-term extended. So same old story. Need a pullback. NSSC. All right, got a lot of alarms going off. All right, so this was a short watch. You know, particularly if the markets are going to be a dud, this could be a 5-minute low idea. I'm going to put it here in the bottom right. I got Tesla on my other computer. Wolf. We are long. Let's move stop yesterday. Friday's low now. Actually, let's move it under. How about just under 55.50? See where I'm getting that. You know, under this pivot, and then just a little bit more. MRNS alarm, ICE low alarm. Okay, yeah, I was watching ICE on a pullback. All right, Mondays are my busiest with all these alarms going off, new trades, open trades. All right, all I can do is go one by one. 55, 48. MicroStrategy was another short put idea. Let's sell a third. And the strength right here, 57.40. Well, we're up $5 on the PayPal up alarm. It would have been a put spread idea, but there's no juice. Oh, Greg, let me get to your DG spot. Hold on. Let me post this to advisory. All right, one by one. That's all I can do here. Probably move stop 30-minute low on that also, but we only have a third left. And PayPal.